Hey guys, welcome back to the channel. It's me, Adam. You're watching Steady Invest, and we're going to be continuing our theme of talking about my favorite semiconductor companies. And this pick is actually my absolute favorite company when it comes to 5G that just happens to be a semiconductor company. And that would be Skyworks Solutions, ticker symbol SWKS, and it trades on the NASDAQ. There's a lot to like about Skyworks Solutions. I'm very bullish on them as they're well positioned to take advantage of the 5G revolution. Having a big part of the iPhone supercycle, they got that. Having a flawless balance sheet, they got that too. Blowing earnings out of the water, they did that too. We're going to get into plenty of details in a moment, but if you haven't already, smash that like button. It helps my videos get out there. And if you're new to the channel, welcome aboard. Hit that subscribe button. And if you're in Canada and want to start trading with Wealthsimple or Questrade, use my links below and we'll both get free money. Now, on to the video. Alright, and looking at the all-time charts, we have the tech bubble, not much going on until 2011 or so, and then it ramped up. We had a little bit of a mini crash over here, and then up and down for the last half decade. And over the past year, we've broken out past this resistance of 115, 120, and now we're at all-time highs. It currently owns a $31.25 billion market cap, and also yielding a dividend of 1.06% a year. And as I mentioned before, they're a semiconductor company for use in radio frequency and mobile communication systems. They're trading at a forward PE of 17.63 and want to see a beautiful balance sheet. As of September 30th, 2020, total assets of just over $5 billion and total liabilities of under $1 billion. And virtually no debt at $150 million. So right away from a valuation and financial standpoint, check mark. So as you're probably well aware, there's currently a chip shortage globally, and this is because over the past few decades, the vast majority of chip makers have transitioned to fabless model, outsourcing chip production to a handful of enormous foundry companies, predominantly located in Asia, because it's cheaper over there. This has yielded considerable benefits by reducing capital expenditures for many companies, effectively consolidating that part of the value chain for greater capital efficiency, which leads to lower costs for consumers. However, Skyworks uses a hybrid manufacturing model, vertically integrating the core production while entering into strategic partnerships for certain technology. That gives the company greater control over its manufacturing capacity, better positioning it to adapt to challenging conditions. Now, that's not to say that Skyworks is completely immune. They don't make everything in-house, but they have done an overall good job executing on their end. Now onto their earnings, and read this from Seeking Alpha. Skyworks Solutions earnings reveal that the 5G era has begun. Skyworks Broad Markets business is also growing strongly, producing 10% growth sequentially and 35% year over year. Also announcing a $2 billion stock repurchase. And right now, it's all about the Apple supercycle. As Apple is Skyworks' largest customer, and that status has only grown larger during the quarter, Skyworks' earnings report released last Thursday showed that 70% of all Skyworks revenue now comes from Apple, which is up from the 50% range last quarter. Apple entering the 5G arena with the iPhone 12 is a sign that the 5G era, with all the explosive growth that Skyworks management has long promised, has finally arrived. And it gets even juicier than that. Skyworks Q1 2021 revenues came in at an all-time revenue of $1.51 billion, which is more than $455 million above the midpoint of company guidance of $1 billion. Mobile revenue grew 80% year over year, and that was driven by widespread content increases from 5G phones. Most of the revenue growth can be attributed to Apple. Different analysts have estimated that Skyworks gained somewhere between 20% to 30% more chip content in the iPhone 12 series versus last year's iPhone 11 series. Skyworks also registered a record adjusted operating margin of 41.2%, which is awesome. Skyworks also registered a record adjusted operating margin of 41.2%, which is great, but the awesome thing is that they generated strong operating cash flow of $485 million in the quarter. And one of the biggest things I'm looking for in a company when I'm investing in them is their operating cash flow, which is a long-term indicator of a strong business. And what's also good to see is although they get a lot of revenue from Apple, their broad market business, which Skyworks considers as everything outside of mobile phones, also did well, as revenue in the division established a new quarterly record of $326 million, which was up 10% sequentially and 35% year over year. And this is from applications that support remote work, gaming, automobiles, remote schooling, exercise, and various audio solutions. So the bad news for Skyworks is that lately Apple has been making moves to vertically integrate by taking action toward building its own semiconductor components. So this past November, Apple broke a 15-year partnership with Intel for manufacturing processors used in laptops and desktops. And back in December, Apple announced that they're going to be ditching Qualcomm for in-house modem chips. And the day that was announced, Qualcomm had dropped 7%. This would be a big risk. However, Skyworks manufactures RF devices, which is very much different in the production of microprocessors like the ones Intel make or the production of modems like Qualcomm. And this is because RF devices are not fabless, meaning all RF device manufacturers also own their own semiconductor fabrication plants. And in the wireless industry, there is no third-party company to outsource the RF manufacturing to. And this is because Apple operates for the most part as a fabless hardware company, meaning Apple engineers design their products and then outsource production to third-party manufacturers. And there are only really two companies that manufacture RF devices to the level that Apple would require. This would be Skyworks Solution and Qorvo, and neither could be easily bought and integrated within Apple because both companies are suppliers to many of Apple's competitors. And for next quarter, Skyworks predicts that it will generate revenue ranging from $1.125 billion to $1.175 billion, and pro formula profits of about $2.34 a share, representing revenue growth of 50% and non-GAAP diluted earnings per share growth of 75%. Moving forward to their investor presentation, and when we look at customers that are not named Apple, you see a lot of very recognizable names. The connected car pacing toward 2021 plus opportunity, 73% of cars to ship with cellular connectivity by 2024, and what's exciting is that we're seeing a lot of new technology as well. So over the last 10 to 15 years, we also have mobile devices like tablets and smartphones all get data connectivity. Next up, we have the Internet of Things, and now we're kind of seeing that come to fruition right now. And what's coming up is really exciting: artificial intelligence, virtual reality, emergency services, and so on. And again, going back to the numbers again, world-class financial performance, and you always like to see that when you're investing in a business long-term. We're going to continue seeing market revenue growth, 53% gross margins, which is very good, 40% operating margin, and 30% free cash flow margin, targeting a return of 60 to 75% of free cash flow to shareholders. Looking at price targets, we're currently at all-time highs at about 190, and we're currently at a double top when we hit that high on February 2nd. And as early as today, when the video comes out, we could be seeing new all-time highs above 190. Or we hit a resistance and then start testing this level again, which has a lower limit of about 170. But this is for me holding a long-term business. I'm going to continue dollar cost averaging, and the price in a few years, I won't really care if I got in at 190 or 185 or 160. And that's why I'm so long-term bullish on Skyworks Solutions. They check off every major fundamental I need in order to invest in a company long-term with such confidence. Especially after the latest earnings call, it just backed up what I already believed to be true about the company and even more. But that's the end of my video. Thank you very much for watching. If you haven't already, please hit that like button. It helps my videos get out there. And if you're new to the channel, welcome aboard. Hit that subscribe button. And if you're investing in Skyworks Solutions, let me know in the comments below. See you guys in the next video.